Hello. What's up, guys? Today's a very good day, as you can already see. Today we shall be communicating on mastering the first pillar of forex trading. I will make sure that this video is not much longer. Yeah, I don't want it to be much longer. So I'll be doing this video illustrating on how to master market structure. Then after that, I will do a video because I want to make this thing much practical. Yeah, you will find that most of the traders which we have today, they will just come into YouTube channel, or they will just come into the market, or they will just come into people and claim that they are traders, yet they don't show you the practical part of it. And if they happen to do the practical part of it, some guys have been faking, whereby I use TradingView, but I'm on free mode, on free trial, whereby as you can see here, whereby I'm pointing this one, they use what you call they replay. Replay means, like they replay on how the candlesticks are forming. So once they get a move, maybe they actually, they identify a certain move, they do a replay, and then they just do like it's just replace an order, which is not the actual thing, which is like it's not the thing that they do. But for me, I will do this, I will illustrate this one, then I will do a video giving you the actual thing on what I'm supposed to do. The video is gonna take almost 1 week, but I will do it in series, whereby on Sundays I do what you call market analysis on higher time frames. Then on Tuesday I'm waiting for my view, or my what I'm targeting in the market to be obeyed. Then on Wednesdays I take most of my trades on Wednesday, or on Tuesdays on the New York sessions. Then I close my trades on either on Friday, or I can continue holding the trades for the next whole week, based on my strategy and based on the technical, like based on the fundamental. Now, for you to master the first pillar of forex trading, which is now the market structure or the strategy. Yeah, in short, this one is strategy, on how you can master a strategy. Now, yeah, I need to change this one. For this is not market structure, but it's basically the market, what we call the market what? No, this one is a strategy, trading strategy, strategy. Now, I want you guys to be in a position on how to master trading, on how you can build a trading strategy. Now, as in the previous video which you have not watched, I talked about the three trading strategies. And these three trading strategies are we got trading strategy, the three pillars of trading. We have we have trading strategy, then we have risk management, and we still have trading psychology. Whereby I talked about trading strategy is just it's a skill which can be developed over a period of time. Risk management is something which you can do once and for all, and you are done, as I did. Trading psychology, which I said that this one is the most difficult part of trading, whereby trading psychology will keep haunting you. So I'll be doing a series, each illustrating each. This one is will be a bit shorter, but once we come to risk management, this is where you'll have to bear with me that it is going to be long, since in the risk management I will be illustrating on how you can calculate pips in different pairs, and then on how to set the stop loss, and on how to use proper risk management. Now, guys, today for trading strategy, let's get back into the video. Trading strategy, as you can remember or you can recall from the previous video, the link is below. You can click and watch it. Trading strategy is basically you're supposed to base it into things. Trading strategy, you're supposed to have what we call the technical part of it and you still have to do what we call fundamental part of it. Now we have technical, then we have we are supposed to have technical, then we are supposed to have what we call fundamental fundamental part of it. And I talked to you guys that once it comes to fundamental, like once it comes to technical analysis, this is whereby you deal with the charts. This is where you deal with the charts. Then, so that you can be able to understand the all these where we call high highs, high lows, and high whatever, resistance and support indicators and all those. Now, the fundamental part of it, this is whereby you take to cover what you call economical calendar, whereby you are able to figure out. But this one, when it comes to fundamental, it is a really tiresome job once it comes to fundamental analysis. Since you have to follow what we call interest rate, you have to follow what we call consumers price index, you have to consider PPI, that is a producer's price index, where you have to consider all the gross domestic price, all those. But now for me, I will give you a simple way on how you can do taking like fundamental analysis in the simplest form as you can. Now let's get into the work whereby we have whereby now we have the trading strategy. Let's get into part of it, the first part of it, which is now the technical part of it. Let's do technical and see where you are supposed to know. Technical, we have technical part of it. Technical, yeah, that is the first thing for this. Now, once it comes to technical part of it, all these we have different parts, we have different things, to illustrate when it comes to technical. We're gonna talk the first one. I will talk basically on what I use, because I don't want to talk about indicators which I don't use. For these, I will be blindfolding you. I'll be brainwashing you that you should use a certain thing which I don't use. I don't recommend that. As a trader, teach your students what you use. For me, I don't use indicators. The only thing I use, the first one, I will talk about market structure. Market structure. I will talk about market structure. The second one which I will talk about, let me just I want to be systematic. Yeah, I'm supposed to be organized. I will talk about market structure. Then the next one, I will talk about something we call order blocks. Order blocks. This one, I am used to short forms. I will talk about order blocks. Then the next one, I will talk about change of character. I will talk about change of character. So every time you're gonna see me, I will be doing live trading. So whenever you see me marking all these in short forms, so you'll be in a position to understand. I will talk about change of character. Then I will communicate about resistance. I will talk about resistance. I'll talk about resistance and support. These are common words, especially to most of the traders, especially the beginners. All these what books talks about. Yeah, I will communicate about that because this is what I use and I have a strategy on how to use these ones. So let me just put these ones in that color. Now, this is now the technical market. All these are the 4 things which I use in trading. These ones. The first one I'm going to communicate about when it comes to market structure. In market structure, we have three different types of market structure. Only those. I know only those. I have never heard of any else market structure. I have never heard of it. We have different types of order blocks. We have different types of order blocks, and we have different types of resistance and support once it comes to trading. But I have never heard of any other different type of market structure apart from the three I'm going to name them. So let's do this. Let's talk about the market structure. The market structure, we have the first one. Let me just highlight. Let me just type it. Then I'm gonna write market structure. I have never heard of any other different types of market structure apart from this one, market structure. I'm gonna write it MS. Yeah, that is what I do. This one is just a short form of what I use. So whenever I'll be trading, so you'll be in a position to understand. So let me talk about market structure. In market structure, we have the only three types of market structure. And the first one, market structure, which is very common. We either have a market making high, then making a high low, then making a high, then making a high low, then making a high, then making a high low, making a high, then making high low. This is the kind of what we call this type of a market here. We call it an uptrend. Uptrend move, uptrend market structure. And this, yeah, this is the kind of the first trend or the first market structure which you will come to know. We have this one. This is now the market structure whereby we are making high, high low, high low, high low, high. Why is this called high? Or why is this called high and this one is called high low? Now, as you can be in a position to see that this was the first high which was made, right? This was the first move which was made, the high. Then the market came, made what I would call a retracement, then made a huge move, breaking the previous high, making a high, right? Making a high. Then after making a high, you're gonna mark a position like this. This is the high which was made. Then you mark like this, right? Now I recommend that you should now be extending your high or your high low like that, right? Yeah, it is very good to mark this one. Somebody will be asking me, why are your high lows not coinciding the retracement? That is what now the book is trying to tell you, that these high lows are coinciding with the previous highs, which once you come into the market, this is not the real thing, and most of the guys they suffer from what we call market paralyzation, market analysis paralyzation. You are no longer able to do market analysis anymore, right? Now stick with me, guys. Now, market structure, the first one, we have the uptrend market structure, whereby the market makes a high low, high low, high low, and a high. Now we have the second type of market structure, which we call as the downtrend. We have downtrend. We have downtrend move or the market structure. Market structure. Now, how is this downtrend market structure made? Now, this downtrend move is now formed like this. A market makes a low, then makes a high low, then makes another another low, then after making low, it makes another low high, then makes another low, then makes another low high, then makes another low, and so on. Whereby the market is making a good makes another break of structure here. You will ask me why is it called break structure? Since it has broken up the previous swing. Alright, yeah, like that. Then we're gonna have another one here, like that. Now, this is the downtrend, and we have uptrend and we have downtrend. That the market made a low, high, low, high, low, high, low. Now, these are the two types of market structure where the trend which we have. Now, we have another one which is very now tricky. We have another one. Let me show you guys. I will have it here down, whereby this one is whereby we have what we call consolidation. We have consolidation type of market structure. Right, let me just have it, whereby the market now makes equal highs and equal lows, like this. Makes a high, and then makes a high low, makes another, like makes a high, a high low, then high. Now the market continues making these these equal highs and equal lows. Very unfortunate that these equal lows and equal highs and equal lows, most of the cases are not in the same, they are not aligning. You might find that this one high might come into that position and another one like into maybe equal, then all of a sudden up there, then all of a sudden to here, then all of a sudden to here, then all of a sudden here. The fact is, this one is a consolidation market state. Are we together, guys? This is a consolidation market state. This one, whereby, let me just have it like this, whereby the market is making equal highs. Are you getting me? Equal highs. Equal highs and equal. Oh yeah. Equal lows. Yes. So in this position we have what we call equal highs. Equal highs. Then we have another one here. We have what we call equal lows. Equal lows. Exactly like that. This one is a consolidation type of market. Then we have downtrend, we have uptrend here. Guys, we have uptrend, then we have downtrend, and then we have consolidation. Now, all these guys, if you have all this in your mind, these are the only type of market structure we have. If you have all these in your mind, that you know the market is either going to make an uptrend, a downtrend, or a consolidation state of market structure. If you have all that in mind, you are good to go. So the next step you're gonna have is know how to approach this kind of market structure. Let me just do this. Let me show you guys on how you are supposed to approach this kind of market structure and know how to exit this type of market structure. If you all have that in mind, you are good to go. This is very simple, and this is basically on how you build your strategy. It is very simple. Let's start with our first trend. I'm doing this. If you have a notebook, you can write. Alright? Yeah, it is very good. This one is very simplified. I'm just simplifying on you. But if you like to read some PDFs and books, well and good. Now, let's try to go to the first market structure, which is now the uptrend. How are you supposed to approach an uptrend market? I'm looking at my phone, guys, so don't worry. Yeah, I got some text which is coming, so don't worry. Okay, how are you guys supposed to approach this type of candles, like this type of market, when it comes to trend, uptrend? Now, I want you to practice this. This is what this is how I do approach this type of market. Whereby, if a market makes a high, like it's making this type of market structure, I'm going to do this. It is very simple. Let me just do this. I want you to do, and this I will do it practically. I got a few pairs which are making higher, like this type of market, and I will be illustrating. Now, this is now their market. The market comes, makes a high, then makes a consolidation, like makes a pullback here. Then, the market now makes a what? High. Now, I want you to guys, now, after this, I want you to take these steps. First step, identify the break of structure. This one. I want you guys to approach this type of market. Identify market structure in high time frames. Right? Identify break of structure, whereby this is a high time frame. The high time frames, it depends. I will communicate on this is break of structure. I will talk about this one once it comes to once I will be starting trade, like I will be communicating, because like once I will be talking about the types of traders you are. The type of a trader really matters when it comes to analysis. So if you are, there are 4 different types of, I will communicate on that, so that you can be in a position to understand which time frames are you supposed to do market analysis and which are you supposed to leave. But for my case, I happened to one day to suffer what we call market analysis paralyzation, whereby I could not do analysis anymore since I was getting confused. As I was to enter into a certain market time frame, monthly, I do weekly, I do daily, and then I get 1 hour. And before even I do into 1 hour, I'm confused since the buying. I'm confused. This time frame is buying, the other one is selling, this one is buying, and I'm confused. I don't know what to do. But to avoid that, it is good to understand what type of a trader you are as a beginner, so that you can get a specific number of time frames which you are supposed to do the market analysis. Once you are done, you can now enable to to pull up and pull your stocks, and you can be able to do market analysis even from monthly to 1 time frame. But for me, I do from monthly to, can you guess, guys? 5 minutes. Yeah, but there is a systematic way I do, and once all of them they are aligning, I'm into buying or I'm into selling positions. Now, I want you guys first of all identify break of structure in your high time frames. Once you identify break of structure, this market is going to make a pullback. True or false? This market is going to make a pullback. Now, once the market is going to make a pullback here, remember this part of it, this is the break of structure, is a resistance now in an uptrend. This one is a resistance turned into support. Now, if the market makes a pullback this way, now most of the guys, they are going to enter for a buy this one, since they understand that this one is a resistance turned into support, whereby the book says buy at the support, which is very wrong. Why is it wrong? This way, for me, I do this. If the market makes a pullback to this level, I'm not going to buy. First of all, I will come into my lower time frame, or I will come into this level whereby I can be in a position to understand what led to this type of break of structure in the zone. So I'm going to highlight that zone. I'm going to highlight that zone. Are you getting me, guys? I'm going to highlight this zone here. Then once I identify that this zone I got here, this one zone here, this level, let me just do this zone. I'm going to look for few things, and these things are these. I'm going to get them here. I got something which we call, I'm going to look for demand zone. Then either I look for fair value gap. These are the key things which I'll be looking in this zone. If I happen to get a demand zone, a demand is what led to this. A fair value gap is an imbalance which led to break of structure, leaving a gap between what you call three candlestick formation. I will be doing a video illustrating the fair value gap, but I want you guys to stick with the demand zone. I want you guys to stick with the demand zone, and this demand zone can act as an order block, whereby if I happen to identify that the demand or the fair value gap or the order block is below this zone, is below the previous resistance which was broken into now into support, I'm going to wait for what we call the market to create what we call liquidity. Now, once the market will be, a liquidity is such a way like it's gonna to make, now the market will come into this position like this, and then it's going to make a kind of a swing there, or equal, like almost equal swings, and then the market tends to, like, it's making a good change of character there. This is the kind of formation I use. Then it's going to make a lower, like a change of character. Then all of a sudden, it's either coming back into this position, then buy. Continue buying. But if I don't get this kind of what? If I don't get this type of change of character here, if I don't get this type of candles, like change of character here, if I don't get this one, I'm not getting into the positions. Now, you identify, let me just do a quick recap on this. You just identify break of structure in a high time frame, then go into one lower time frame. If I use day, I'm gonna look for the day break of structure. Then I go into lower time frame, which is 1 hour time frame or 4 time frame. Then I will wait for the market to create kind of liquidity here. Then if the market creates a good liquidity here, I'm going to go down into my 15 minutes. Then I will wait for change of character. If I get a change of character, I will look at the demand zone which led into that change of character. Then I'm going to take my trades. But if I fail to get this kind of change of character in my 15 time frame, I'm not going to enter into the market. What will I wait? Now the market tends not to make this type of, it's not making what you expect. So the market will come. This is now the scenario 1. Scenario 2 is this one, whereby the market will come into that position, makes a kind of a swing here, creates a liquidity, equal lows there, then tends to, creating this type of formation. Then all of a sudden, of course, at this point, this is where we have stop counts, whereby you're gonna enter into a buy position. Then all of a sudden, the market comes, grabs. Now, once you enter here, since it is a support level, where are you going to set your stop loss? Around the zone, below this zone. But if you are not aware of either demand zone or the fair value gap or order block, what you are going to do is the market will come and grab your stop loss or the sell side liquidity. Then the market goes up crazy, bro. and you will be like, the market, the brokers are trading against me, all these, no, it's against, then nobody gives a shit. This is what the market does. So how am I going to expect if the market, remember, I got two scenarios whereby if the market comes into this zone, now start creating liquidities, and in my lower time frame, 15 minutes, I get change of character, I'm gonna enter into the market. Risk number one. But if the market comes now, start creating equal lows here, I will wait either for change of character or I'm gonna wait for liquidity grab, then I will go into the market. That is the first entry. Are we together? That is the first entry. Now, this is in a buy position. I've given you how to identify entry point in a market in an uptrend. If you have not understood, please rewatch the video and let me know in the comment section either I should repeat. I'll be doing a practical video. The next video I'll be doing on it because I got some pairs on here like USD versus Swiss francs. Yeah, I have many stuff on that, right? Yeah, and many others like Euro, USD. But this one is a sell, this one is a sell, this one is a sell, this one is a buy, this one is a buy. I'm looking for buys on this pairs. So don't worry, guys. So that's how we do once it comes to an uptrend market. Now let's go into a downtrend move. In a downtrend move, it is basically the opposite. I do the opposite of it. I do the opposite of the buying positions. This is how I do it. It is very simple once it comes to. Hope you guys are getting to enjoy this move. Well, basically, once you have all these skills, it is very good for you. But don't worry, I'm gonna tell you for free. Once you start trading, there is that kind of a grid which comes, and you're gonna mess up, especially you're gonna lose money. It is obvious. I know you are traders. I know your mentors will not tell you this. Yeah, not unless you get a mentor face to face and then you start trading for me. Yeah, but if you try yourself, and especially if you don't have a mentor, you're gonna lose money for the first time. I won't lie to you. I'm telling you for free. You're gonna lose money for the first time. But don't worry. This game is very enjoyable. You can make millions of money within short time for people. Now this one. Now let's go into a downtrend move. This one, a downtrend move, whereby a market makes a low, now makes a low high, makes a low, right? Then makes a low high, like I want to. This one is expiring. Now, then makes another high. This one makes a low high, then makes a low here, then makes a low like that. Now, I want you to get this is the kind of market structure is making, right? Are we together? But now you don't know how to enter into this kind of market. It is very simple, guys. It is very simple. You're gonna use it is the repetition of what it's the opposite of what you're doing to buy a position. Whereby you just wait for the first move, this one. You just wait for this first move to be created, like this one. Yeah, just relax. Then after making that position, wait for the market to make this pullback here. You are away now, you don't trade on that. Now, if the market comes and now create another move here, once it creates a move like this, you now come and now mark all your zones. You're gonna come and mark, you will say this one is a break of structure. In a high time, this is you have to make, you can extend the right like that. Now you're gonna come and mark this one as your break of structure in a high time frame. Very simple, guys. Break of structure. Now once you mark this one as your break of structure, this one, guys, so what are you going to do? You are going to come after now marking all these. The second thing, identify what led to this break of structure. So you're gonna look for this case, the supply zone or the supply zone. the supply zone. The supply zone. How? You are going to mark either, maybe you can identify a certain, either supply zone and the favorite gap. It is very simple, guys. The same steps. So here you're gonna come and write supply. Maybe you have identified the supply zone. I don't know whether you're gonna identify. You know how to, like, you're supposed to know how to approach, like, to approach this, and to know how the supply and demand zone, which how they are formed. Then you're gonna look for fair value gap. Simple. The first two things, yeah, just identify those supply and favor, like the fair value gap. Simple. Now, once you start, now what you are already, the market is already here in high time frames. So you're gonna go into a lower time frame, whereby in this lower time frame, this is where people get full. Whereby, let me show you how the market fools you guys. It's very simple. You're gonna be full. This one. This shade is very interesting. Whereby the market will not come into this zone directly like this and then start going back massively. No. The market is going to make this kind of a move whereby it's like buying, and then you get into fall into this kind of a trap, The market is like making these high lows into this kind of a market. Then you become fooled, and then you say this market is going up, and then you fail because the market doesn't care on your emotions, right? So how are you going to approach, how are you going to approach this type of a market? Just wait for the market to come. Yeah, let it come the way it wants. Yeah, let's it now make it like this, let it continue making all this. Yeah, this my room is full of mosquitoes. I'm gonna do away with this now. Like, then the market now comes into this one. Now once it started making these high and high lows, what you're gonna wait in lower time frame, that is 15 minutes. This is for me. If the market comes now into this support, most of the guys are going to sell into this zone. So I'm going to wait for the two scenarios. The first scenario is whereby in my low time frame, that is 15 minutes, I'm going to wait for the market to create this kind of liquidity, and I will know that these guys are now selling. I know these guys, and the hedge funds knows, the big banks knows that you're going to sell here, and all your stop loss, they are supposed to be here. Because you have not been taught on how to apply the supply and the imbalances. So you're gonna wait for the stop, like the stop loss, they know they are here. So what the market is going to do? The first scenario is if the market makes or a change of character. If the market makes a change in character like this in my lower time frame, I'm going to wait for my entries into this. I don't care if I'm going to lose together with you guys, but this is my first approach. So I'm going to enter my first entry there. Then either the market can continue favoring me, or the market can grab my stop loss together with our, like, can grab our stop losses, and then we sell. So how do I do this? I do what we call two trades placement. Yeah, I do two trade, like I place two trade, whereby I first place a trade into this zone, whereby the market makes a kind of a liquidity here, and then makes a change of character there. Then I wait for that, then I go. This is the first scenario. That's how I do it. The next scenario is I'm going to wait for the market to come. I can wait for the market now to come, whereby it create another, like, I will change the color, don't worry. I will change the color, don't worry. Whereby the market is going to change, like, create liquidity here. But if there is no change of character, identify. If there is no change of character, I'm going to wait for liquidity grab, then I'm going to wait. Then liquidity, then let me just change the color so that you can see, guys. Yeah, this one. So the first one, the blue one, the first blue one. You see, I wait for the change of character. Let me just take this one and extend turn. No. Let me just do it so that you can see. So I'm going for the wait for the blue one to come and make equal lows, like equal highs. Then I wait for the change of character here, then I'm going to do, right, to enter into this. The next one is I'm going to wait for the liquidity graph, and then I write simple into that kind of a trading type of entries. I got two. This one, it is very simple. Now for the final one, for the final market structure, it is very simple. This is now where we have the consolidation. Hope you guys are getting. You are getting. This is very simple. I will be doing practical. I don't want to be like that kind of a person who gives just the theory. Fuck it. Yeah. So I'm going to do this kind of I will do a structure. I will do the practical part of it, so that I can show the real thing. I don't want to be that kind of a fake teacher, whereby especially in our schools, you just go to the school and the person who is teaching you how to make money is not making money. Shit, bullshit, bro. So no, it's not realistic. It's not real, bro. Yeah. So let me talk about this one. I'm going to talk about consolidation. Consolidation, bro. Yeah, kizungu ilikuwa kizungu mputi pale shuleni. I didn't like the English language. Like sikupenda English shule. And I was like, now, once it comes to consolidation, I said that the market is going to make equal highs and equal lows. Right? Yeah, the market is going to make equal highs and equal lows. And the market can never be like, it cannot make equal lows all the time. Right? Yeah. So for this case of trading, I want to teach you a strategy on how you can trade this one. It is very simple once you want to start this one. This one is very simple. So what I'm going to wait is I'm going to draw these highs here. These equal highs here. Right? Then I'm going to draw my equal lows here. It is very simple. Now, for me to trade this thing, how am I going to know? Like, how am I going to trade? It is very simple, guys. Because the book or the PDFs or the teachers or whatever you listen to says that you are supposed to buy at the support level and you're supposed to sell at the what? You're supposed to sell at the on the demand or the resistance level. So I'm going to wait for the market to come. No, sorry. I'm going to wait for the market first of all to make that equal high, right? Equal high. I'm waiting for that equal high and equal low. I identify, right? Like this. Now the market has already started consolidation, so I will be looking for sales at this zone. How am I going to do it? I'm going to do this one. The market is already there, so I don't know how to trade that. I don't know what to do now at that time. But now I'm looking for another opportunity. How am I going to do this? Very simple. So I'm going to make this. I'm going to mark this. Now what I will be doing is I will wait for the market to come and grab your liquidities, because the banks, the hedge funds knows that your stop loss are here. Stop loss then is they will be here, bro. Now they want they want to fool you. So the market is going to come. What I will wait is I'll wait for the market to come and grab your liquidities or your stop losses. Since you are panicking and you don't know how to do it, you'll be on fire, you will be on heat. This one is a retest and I'm going to be buying here and I will be riding. What the market does. I will wait for the market now to come to return, to go back into that zone of consolidation like this. Then I'm going to look for like a fair value gap here, or I'm waiting for the price to come and retest that zone. Then I'm going to buy, to sell, and I'm gonna mark my profits here. Very simple, guys. Very simple. Mark high, wait for the liquidity grab to be grabbed, wait for the market to come back into that zone, wait for the market to retest that zone if there is a fair value gap here. Simple. I repeat, wait for the equal highs to be formed, wait for the market to come and grab all the liquidities, wait for the market to come back here. Now look for favorite gap here and wait for the market to come and retest into that line. Then you sell, take your profits here. Simple. The other case, the other way, if the market now, like if the market now makes this kind of a move here into this, then let me change this color. Let me just change this color. I want to change this color. I want to make it blue, so that I can be organized. Exactly. Now, if the market now makes this, the market now makes into this zone like this. I want to have this zone where if the market now comes and creates this type, I want to look for buys now. I will wait for the market to come into this zone whereby we have all these equal highs. Now, the market is going to grab your liquidities, then go back into the zone, then retest the support zone, then we go. Take profits, wapi? There. And I'm done with the consolidation, guys. Not unless if someone has a good question for me, or someone has a question, you can comment on this comment section so that you can get. That's how to get a good entries once it comes to uptrend consolidation. That is now the technical part of it, guys. If you are done with the technical analysis, you know how to approach it. It is good to confirm or to enhance your technical analysis with fundamental. On the fundamental part of it, I will be doing how you can cover the fundamental. The fundamental, basically, you just come into what we call commitment of traders, guys. Let me show you how it looks. This one. This is a photo I'm using from someone else, from a website I use. But video on how you can create one. You can summarize all these data into this one. Yeah, it's only that I don't have my flash today. I would have done it, but I will do a video based on this. Basically, when it comes to fundamental analysis, then let me just give you an overview, a summary of it. Commitment of traders, COT data, it is just what the hedge funds are doing on a certain pair. For example, this pair is euro. Every pair on the commitment of traders is traded against USD. That is the dollar. Now, once you will be doing analysis based on euro, you'll be analyzing a COT data, of euro. You'll be covering euro USD. Of course, you can see there is data section, there is long, shorts, change in longs, change in shorts. We have net positions, we have percentage in long. I don't care about these ones. I only focus on this. Now, of course, what the date is. I don't need to illustrate. Once it comes to longs, my guys, it is basically the buying positions that the hedge funds have on euro USD against euro against USD. Shorts are the selling positions of euros against USD. Change in longs basically longs is supposed to be in positive or either negative. If it is in negative, it means that they are closing. They are buying positions against, like euro, buying position on euro against USD. If it is in positive, they means they are adding buying positions of euro pair against USD. And if then we have what we call change in shorts. Change in shorts, they are supposed to be either positive or negative. For the positive part of it, it means that the hedge funds or the big speculators of the market are buying. If it is positive, they are buying euro against USD. And if it is in negative, it means that they are selling, like they are closing their shorts or the selling positions of euro against USD. Then we have the net position. The net position basically it is the difference between longs and shorts. Guys, when the net positions is positive, it means that the longs are more than the shorts. And if it is negative, it means that the shorts are more than the longs. See you guys in the next video. I'll be illustrating on this into deep of it so that you can get to understand. Thank you guys. Remember to subscribe and remember to comment and like so that you cannot miss. Hit that notification button for you to keep updated so that you can be able in a position to follow my next videos. Bye bye guys. God bless you.